On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice and it doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risk and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Please engage with us. We love to get feedback, questions, and comments on this material, and if you enjoy it, please rate it, or even better, share it with a friend or colleague. Term deposit investors have had it pretty good in recent years, but that is changing quickly and many savers are on borrowed time. Interest rates are headed lower and those sitting comfortably on the sidelines need to prepare for that. If they take too long, not only will they miss opportunities elsewhere, but they'll also be facing a hefty fall in income. A 6-month term deposit was offering a yield of 6% in July last year. That's the highest level we'd seen since 2008. That made it a 6-month term deposit was offering a yield of 6% in July last year. That was the highest level we'd seen since 2008. It made it much easier to earn a steady, reliable income from your savings. However, term deposit rates follow the official cash rate, the OCR, and that means they've already fallen sharply and there are more declines to come. The OCR has fallen from a 15-year high of 5.5% last year to 3.75% today. The Reserve Bank, as well as financial markets and economists, expects another 2 or 3 rate cuts from here. That'll be a function of how strongly the economy rebounds and where inflation goes. The annual inflation rate is well within the Reserve Bank's target band of 1 to 3%, and while there are some unders and overs, the job is essentially done. That means the Reserve Bank has the luxury of returning its policy rate to neutral, which is the steady state level where it's not trying to speed things up or slow things down. It's hard to pinpoint exactly where that is, but it's estimated to be somewhere between 2.5% and 3.5%. Let's just call it 3% and assume that's where the OCR is headed. While this is fantastic news for highly indebted borrowers, it's not so good for many conservative savers or those who rely on their investments for income. If you're relaxing in term deposits, you're facing further declines in your income stream during the months ahead. Over the last 15 years, whenever the OCR has been at 3% or more, the 6-month term deposit rate has been, on average, 0.65% above that. The 6-month term deposit rate has slumped to 4.4% today, and it looks set to fall into the 3s over the coming months. Depositors have seen a 25% plus hit to their income stream since the middle of last year, and they could be down almost 40% from the peak by Christmas. It gets worse too, because when you account for tax at 30% and then remove inflation, which the Reserve Bank expects to be 2.5% this calendar year, your real return is very close to zero. It might be time to dump the deposits and get some of that capital working a little bit harder. There is a range of options out there, and they don't all involve moving up the risk curve and introducing significant volatility to your investment mix. A combination of fixed income, both domestic and international, diversified funds, real estate exposures, and income-generating equities might deliver better bang for your buck over the coming years. For many conservative investors, the term deposit party is over, and it's time you spoke with your investment advisor about how to bridge that income gap. Thanks for listening, team. We'll talk again soon.
For more insights, visit craigsip.com.